What are you seeing right now in the market, Beau? And
Yep.
let's just have an open conversation today.
Awesome. Well, thanks again for having me on, man. We definitely killed it on the first video, so let's do it again. We'll throw down some juice on this one. As a reminder to everyone watching this, I typically have done 10 plus units. The bell curve of most of my closings are between 20 and 200 units. I do market rate and I do student housing. That's it. I don't do affordable. I don't do mobile home parks, any of that. And I cover the northern half of Florida. And so, traditionally, there are 14, 15 closings per month of any discipline, student, conventional, and affordable combined in the northern half of Florida. Which may surprise people. They may think, oh, I thought there'd be hundreds of closings. There's only about 15 closings a month, right? So there's about 150, 160 deals a year done. In the month of September, which I just got done doing closings for, there were 6 closings total, right? Now, keep in mind, September means that it went under contract in probably like June-ish, right? May or June. And so this will only slow down the rest of the year. And so, when interest rates go up 300 basis points over the course of this run up, and you're selling a $5, $10, $20 million deal, the effect that has is major. Yeah. Simultaneously, the folks who own these assets, they're earning higher rents than they've ever earned in their entire lives. So to the guy who has the 150 unit conventional complex in Jacksonville, he knows interest rates have gone up. He knows that intellectually that affects value, but to him, he's got more NOI than ever. And so he doesn't need to sell. He understands the values have gone different, but he doesn't need to sell. And so the number of deals that have come to market has come to an absolute screeching halt. I mean, it's just a screeching halt. And I've underwritten a number of larger assets in the last several weeks, but I just can't even create a pro forma that makes sense for what the seller wants. And the seller's not saying, hey, Beau, you're wrong, or hey, Beau, I'm not listing with you. They're just like, yeah, it makes sense. I get it. Well, we'll just hold on to it. Right. Yeah. So they're not changing their expectations. Okay. Now I have a couple folks that just make sense for them to sell because they have so much profit based on what they bought it. And, a million or two here or there is just not going to make a big difference if they wait another year or so. Right. So he's selling. We're working on this. But for the person who doesn't need to sell, they're just doing too well to consider that. So I saw this coming sort of, the interest rates started around March, right? Around April and May, I started thinking to myself, I wonder what smaller assets are doing, right? So I track under 100, I track from 10 to 99 units and 100 units and up. And already this year, year to date through September, I won't have October closings for a couple more weeks, but through September, there have been 66 under 100 unit sales in the northern half of Florida and only 50 sales over 100 units. Now, that's about a 30-something% difference when traditionally, year after year, they have been almost dead even, right? Yeah. And again, we're only through September, which is the very start of the significant interest rate hikes that have gone up when you think about a 60 to 90-day cycle by the time you go to marketing to closing, right? Yeah. So I think we'll start seeing even more effects for at least the next 6 to 12 months. In my mind, I have in my head, and I don't have any scientific data for this like I usually do, but in my mind, I feel like end of 2023, beginning of 2024 is when we'll see our first interest rate decrease. And the only reason I think that is because we've had so many increases so far. And as elections near, Republicans and Democrats like to have something to win on. Yeah. And I think that's coinciding with about a year and a half from now to be about a point at which, that would happen. And I think there'll be a massive number of sales that happen probably starting in 2024 and possibly going into 2025, depending on who actually ends up being president. And so anyway, so number of listings coming to market is going to slow down. It has already slowed down. The number of closings will slow down dramatically. The under 100 units are, while they are down number of closings, they're doing a hell of a lot better than 100 plus units. And the reason is because while interest rates, as they increase, while they affect all assets proportionally, right, the actual dollar value difference is dramatic, right? So a $20 million deal, like you and I were talking about earlier, a $20 million deal and a 200% or a 200 basis point increase could be several $1,000,000 in value difference, right?
Yes.
But if you've got a 15 unit, $1.5 million deal, might be 100 grand, might be 80 grand. And the guy who owns that, who bought it for half that 6 years ago, he ain't flexing over 100 grand or 50 grand, right? Like he's going to sell it. He's harvested his equity. He's ready to go. And so around, I want to say it was May or June, simultaneously, one of the guys who used to drive, who has always driven for me, you know, anytime I go out of market, I always hire a driver. They take me to different markets so I can work at the same time, is a 24-year-old guy who I've known since he was young. His graduation was coming up in August. And I said, hey, what are you going to be doing for graduation? And he said he'd like to come work for me, right? He's been driving me for several years. He's heard the real estate business. And the reason I started thinking about this kid was, number one, I wanted someone organic who hasn't been contaminated in their head, who hasn't learned bad practices at other brokerages. But number two, I'm watching these interest rates and I'm hearing about more hikes coming throughout the year. And I'm seeing the sale numbers for under 100 units already surpassing over 100 units. And I'm thinking, well, shoot, maybe, you know, no, I wonder what's happening under 10 units. Because those aren't deals that I do, right? I just haven't messed with them before. And so in the Gainesville market only, just because that's where I'm based, it's where I know, I just wanted to kind of have a little test fit. So I started doing some tests, and there is 5.1 times the inventory of under 10 unit, you know, duplexes, triplexes, quadruplexes, eightplexes, 5.1 times the inventory of 10 plus units in Gainesville.
Yeah.
And almost 4 times the number of sales. So I started adding them up. I started adding, you know, there's almost a couple $1 million in commissions on these little deals, right? And nobody's calling these folks was what I start finding out, right? So I hire this kid, I make him an offer, he accepts, he comes over after he graduates in August, and we start employing the same system I did to build my larger apartment business, which is we exported every single asset under 10 units from the tax assessor websites. We categorized them in every which way: number of units, bedrooms, market rate, age, who bought it, what they paid for it, all that stuff, right? Import it into our CRMs when we begin our phone calls. Shane, I haven't made 20 phone calls yet. Okay. We already have a listing and we're negotiating offers on an 8plex. We've made an offer on another 4plex. We aren't there yet. And I'm underwriting 6 other buildings for listings right now. Okay. And that's 20 phone calls.
Yeah.
To have that kind of action takes me 4 months in the 10 plus unit world, right? To have that many deals, like I'm about to capture the listing. And also the phone call is different. Like the phone call to the folks who own quadruplexes, these are people who are full-time in other businesses. Maybe they own a law practice or they work for somebody else. And each of them own 2 to 4 buildings on average, right? And so when they get a call from a broker who knows what they're talking about, who spits out some stats, who tells them about what's going on in the world and how some of the larger apartment owners are now looking at smaller stuff and that their property is prime, like they're so receptive. It's such a totally different phone call.
Yeah.
Because when you and I make phone calls to the larger apartment owners, all they do is multifamily, right? And so they're getting calls from brokers all day, every day. And so we become kind of white noise. But the person who owns 4 duplexes and an 8plex, and the broker calls them up and spits off some stats, every single phone call so far has been either, I absolutely want to be on your mailing list, know about your next listings, or I'm interested in the 8plex you just listed, or, hey, Beau, as a matter of fact, we're not really buying anymore, but my partner and I have been thinking about selling our 4 fourplexes over here. Every freaking phone call, I'm just like, whoa, this is amazing, right? Now, I don't personally want to get involved in doing a bunch of these deals, but I'm going to train up this kid to be a murderer.
Yeah.
Right. And I just think that moving forward, certainly 10 and under is going to be super active, but that 10 to 60 units, sort of non-on-site staff kind of apartment complex, that's going to be where there's going to be more volume traded.
I mean, there's so many different things and directions I want to go in, but I think probably if I'm putting myself in the audience, they're probably wondering like, what are you saying on these phone calls? Like how does it generally go? Like, are you pitching them? Are you giving them information? Like, what would a typical what would the typical first 30 seconds even look like? Because I think that's where a lot of people struggle with, right? Like because you can lose a lot from that.
Right. Well, let me preempt the work that goes into that. First is when I was building my large apartment brokerage, almost everyone only does apartments. So they're a business, right? And in the United States, we have, and I'm not sure if you had this there or not, but we have a do not call list, right? So essentially you can add your phone number, your home phone number, your mobile number, whatever, you can add it to a do not call list, which is a registry with the government.
Right.
And if you call someone who's on the do not call list, you can be fined up to $44,000 per call.
Wow.
Okay. Now, when I was building my large apartments business, everyone's a business. If you're a business, if I'm a business as a brokerage calling another business, you're exempt. It's fine, right? Because it's business to business. If they're on the do not call list, you cannot call them, period. If they're not on the do not call list, you still have to register your business with the government and accomplish an exemption to call any human being, even if they're not on the do not call list, if you intend to sell or talk about selling or buying or whatever, right? So we went through all that. And I started thinking to myself before I made these calls, and I was like, a lot of these people are residential people. Like I can tell these phone numbers are home numbers and cell numbers. Yeah. Let me make a call to the government. So I called up the government who handles the do not call list. And they're like, oh yeah. And so they ran through all this whole thing with me, right? So that was a whole hell I had to go through. First of all, was every phone call we make, we have to run this phone. We have to, first of all, to get on the registry. Yeah. We have to become exempt. Then we have to pay. You have to pay for these zip codes. Okay. You get 5 zip codes for free. Anything above that, you have to pay like $70 for zip codes. And it's only good for a certain amount of time, right? So once we did all that, now every phone call we make, we have to run a phone number for. So it's not like I can go boom, boom, boom. We have to run it through, make sure it's there. Because you screw up one time, it can cost you big, right? So every time I make a phone call, I never make phone calls, Shane, where I'm just doing this one after the other blindly. I research every human being to a point at which if they knew what I knew about them before I made the phone call, they would be freaked out, okay? So I'm not looking to make 50 calls in a day. I'm just looking to make enough number of calls in a certain window. If I do a 2-hour window, I may only get 5 calls done. But I'm looking up their Facebook account, their LinkedIn account. I'm looking at what their background picture is. I'm looking at what they post about. I'm looking at what their hobbies are, how old they are, what color they are, what company they work at. Like I want to have a sort of a picture in my mind of the human being I'm talking to, so that I can establish that rapport right off the bat. Yeah. On LinkedIn, I'm looking up who do we know together, right? Because that's a commonality I can bring up. Where'd they go to school? So I look at articles they've written, articles about them. And then, of course, because I've uploaded every single asset they own into my system, I also know all the assets they own and what they paid for. So to answer your question, let's say I have a listing already. I'll call them up. Hey, Shane, my name is Beau Beery. We've never talked before. I'm an apartment real estate broker based in the Gainesville market. I see you own a 4-plex over in Cedar Ridge. And my firm, we just listed an 8-plex about 2 streets over and thought I might give you a call. Thought you might have an interest in maybe hearing about it. That's all I do. And every single one of them was like, well, yeah. Now, if I had no listings at all, then it would go very similar. And it would be, hey, Shane, my name is Beau Beery. I'm an apartment broker over in Gainesville, Florida. I know you own a 4-plex over in Cedar Ridge. Do you have any interest in adding some more buildings in that same subdivision? Or do you have any interest in picking up some more, 8, 10, 20 unit complexes in the Gainesville market? And every single person's like, well, yeah, what you got, right? But I never call up and say, hey, I see you own fourplex in Cedar Ridge. The market's hot, things are amazing. I can sell that for you for $500,000. Do you want to sell? Right? They don't know me. They have
Yeah.
no idea who I am. I could be some spammer. I could speak, whatever it is. I want to establish rapport. I want to add value for the next 5, 10, 15 phone calls. And then when they've gotten to know me and I'm saved in their cell phone and we're Facebook friends and we're connected on LinkedIn and they see that I'm a human being that puts out value, when they think of selling, then they come to me. Right.
I mean, that is so valuable in terms of, I mean, I just want to highlight a couple of things. Number one, you go in with so much preparation, right? Because I think there's a misconception
It's
of,
about 20 minutes a call just to prep for them.
yeah, just a prep, right? And you have it down to a system. So someone new, it might take them an hour to do the same amount of research because you've been at this for, maybe 20 years, right? Like you've got systems, you know what you're searching for. You've probably got them all in your browser. And then like the way that you approach that initial conversation in terms of what a buyer wants, what an investor wants, right?
Every investor wants to buy more. Period.
Exactly.
If they wanted to sell, they would have already called a broker because everyone knows a broker.
Yeah.
There ain't a human being on earth who's just kind of like, my wife and I are thinking about selling. Now, what? I don't know any brokers in this market. Who the hell? It's never even happened ever in the history of the world. They've already gotten 15 phone calls saying, hey, do you want to sell?
Yeah. Okay. I want to kind of go in a different direction here because interestingly enough, I actually have a 21 unit apartment that I own that is now under contract. And
Sweet.
and some of the things that I was thinking about as you were describing, the number of sales volume that has gone down and interest rates and where they're at. And I don't know if the US market is different, but would are most investors that you would be dealing with that own multifamily, do they have fixed rates or do they have variable, or is there, like in Canada, I don't think you can have variable commercial mortgages, but I don't know in the US whether or not that's an option. Or
So many of them were done as a 3 to 5 year term. Many of them are interest only,
interest only.
right?
Yeah.
And then they go to fix after that. But by that time, they've already sold.
Yeah.
Right. They're almost all 30-year amortizations. They're typically 25 to 35% down. Yeah. Right. So 65 to 75% loan to value. And there's definitely some swaps involved, right? But there's not a whole lot of variable stuff. And the smaller the asset, the more it's definitely going to be a fixed deal.
Sure.
And particularly the under 10, 15 unit world are usually 30-year fixed terms, period. Like now they may now once it gets to a residential product, which is 4 units or less, they'll have a 30-year term, 30-year fixed, the whole works.
Okay, so let's say someone bought a property 2 to 3 years ago. They have 10-year term financing on it, 25, 30-year AM. Could they come to you and would they still get the cap rate that they could have got 6 to 12 months ago? Because presumably you're, and the assumption I'm making is that you can assume this mortgage. And so like, let's say I can assume 3% debt. Could you go out into the market today and still achieve a lower cap rate because you're getting that lower interest rate? Or I'm just curious, like,
the problem with that is the value has increased so much that the next buyer's loan to value would be so low. They have to come up with so much equity. And, I mean, listen, most brokers, especially as our asset gets larger, are not really solving for a cap rate. We're solving for cash on cash returns and IRRs, right? Yeah, and so when you think about, the more money an investor has to put down, it affects the cash on cash return. Yeah. And because so many of these investors are syndications, they have investors they have to pay, right? So they got to be bringing in 6 to 8% cash on cash. And so if they have to put down 45% to assume a 3% interest loan, that's just going to dilute the cash on cash part. All right. And so to answer your question, the cap rate will probably not be as low as it would have if it was an 80% loan to value, 3% deal. Gotcha. Because there's still the cash on cash is still getting, it's getting diluted, if you will.
Okay, so
But it's still good. I mean, it's still good. If someone has enough equity to put down, they'd
right,
love to inherit that loan,
sure.
sure. And if they're not a syndication, then they could probably even pay more, right? Because it's just their own money. They don't have to share with anybody else. They don't have a certain cash on cash they have to meet. But it's definitely better. It's just not all a straight up, yeah, I can get you a 4 cap.
Gotcha. Yeah. Okay. So I'm glad that you touched on the cash on cash, because this is kind of a conversation I'm having with more and more people, whether they're brokers, whether like me, I'm out buying things right now, and that
Yeah.
is around market deals. I'm essentially saying, look, like for me to take action today in this uncertain environment, it really has to be a compelling opportunity. And I'm curious, like, are you seeing buyers changing? Like let's say 12 months ago they were looking for an 8% cash on cash. We'll just pick a number, whatever it is, 6, 8%. Are they now looking at it saying, look, if interest rates, like I think that they could continue to rise, and I really don't know where the market's going to shake out. For me to put money into a property today, I actually want a premium. I want a 10%. I want a 12%. Are you seeing that? Are people coming to you with those concepts, if you will, or what do those conversations look like from your perspective?
Yeah, I'm actually going to pull up. I just did a poll. I do polls weekly on LinkedIn
Yeah.
because what's beautiful is I think I have like 15 or 16,000 followers, so it allows me to get a lot of responses on different polls to where there'll be hundreds of responses, and so as a result, the content or what you're seeing can be valuable, right?
Yeah.
Versus if you just got 80 votes, you're like, that could have changed somewhere else. And so I did a poll on what folks are now underwriting from a cash on cash standpoint. And let me see if I have it here. So if you increase the most. Sorry about the pause
Oh,
here.
that's okay.
Uh, ba, 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 ba.
And even just while you're finding this,
Anyway,
like
the
you,
results were the biggest tranche was that
yeah,
people were wanting 7 to 8% cash
okay,
on cash. I think that was like 40% of the vote. And then the other one was like 9 to 10%,
yeah,
right? And then I think there was only like 15% were still in the 6% range.
hmm,
And then like another 15% wanted like 11 or 12% or more. But most people were between like that 7 to 9 mark for
okay,
cash on cash. Whereas prior, it was anywhere from like 5 to 7. Some folks wanted 8, but those were hard to find. And by the way, the big difference is the 5 to 7% cash on cash was as long as I can achieve that in a year to a year and a half.
so stabilized. Like once they've
Right. It wasn't even on trailing, right? Now it's I want, call it 6 to 9% on trailing if I
going in.
can, or really, really soon after.
Hmm.
The other thing, of course, is they're inputting a little bit higher exit cap rates.
Mm-hmm.
I get why investors are doing that. I can't argue with it. It's just not real. Another poll I did with hundreds of votes said that 91% of investors control when they sell. And if they control when they sell, I did another poll asking them if they thought cap rates would return back into the fours anytime in the next, I think I put 5 years.
Mm-hmm.
And of course, I think it was like 2/3 said yes. So if they think interest rates are going to return in the next 5 years, or let's just say it was 10 years, I don't remember which one it was, and they control when they sell, why would you enter in a exit cap rate today that is more than the interest borrowing rates, thus making it more difficult for you to ever buy that asset, right? If indeed you're going to sell at 4.5 or 5 caps in the future, right?
Yeah.
Now, that's me and you talking. That's what's actually going to happen is people are going to underwrite at a 6% or 5.5% exit cap if it's a
Yeah.
B or A asset today. But the reality is they're probably not going to sell unless it's a freaking home run in the future.
Yeah.
But it's also, I get it, it's smart to cover your butt because what if interest rates don't recover for 5 years or 10 years? So I get it.
Yeah. It is tricky. I know even in my own underwriting right now, I think especially if you're going out raising capital, it's hard to look an investor in the eye and say that like we're basing our assumptions on what we know today. and then to go into the future and presume that cap rates are going to compress and we're going to get this big lift. I think a lot of the investors I deal with, they are kind of 50 to 65, maybe even a bit older. They've lived through the 80s when interest rates were, 16, 18%, and they're
Right.
very happy to remind me of this, right?
Yep.
And so it's just one of those situations where it's hard to argue when no one has a crystal ball and you really don't know. So the only thing to do in my what I'm doing is just being extra conservative, running higher sensitivities. But similarly, I'm saying, look, I'm not going to build, because I'm doing a lot of development right now. I'm not building to sell this at a 5.5 cap. Like, I don't need to sell, so we're going to keep holding this because the cash flow is so good, right? And so, anyways, that was just
Most long-term holders, if they are syndications, they have to put in an exit cap rate just to show them. But
sure.
most investors who control their destiny and are long-term holders are not made up of investors. They don't even enter in IRRs into their model. They just want long-term cash flow.
Yeah.
And as long as that works, they're all good, right? And I think a lot of these investors buying at these 6% interest rates are going to refi the next 3 years. I mean, I again, it's crystal ball and I'm just pulling things out of my ass, but I do think interest rates will adjust before then and they'll refi.
Okay, well, let me ask you this, because I struggled with this on a recent project that I just put some term debt on, right? And I put 10 years. It was under 4.5%. And I really struggled because I thought, I believe that interest rates are going to come down, but I don't know that. And when I'm a steward of other people's money, it was difficult for me to kind of roll the dice and say, you know what, let's get 3-year money because I think interest rates are going to come back down. So what are you seeing with the buyers that are actually transacting today? Like, are they doing 5-year money, 3-year money, 10-year money? Like, I'm curious just to see.
It is more of a hodgepodge today than it's ever been, right?
Right.
It's always been 3 to 5 year money, right? And
Mm-hmm.
because the average hold time right now, I think is something like 52 months.
Okay.
The last time I did it about a year ago, right? So it's about 4.5, 5 years, and that's the cycle. However, there are definitely more folks. First of all, I'm getting way more calls about seller financing, like
Yes.
through the roof comparatively. I mean, I'm almost used to just, for the several years running up to this, when someone says to me, "Hey, Beau, you think they'll do seller financing?" I'm automatically thinking this guy's not a player.
Yeah,
Like who asks that in
that's
this
right.
environment? It's ridiculous, right? Now it's like legit. I'm doing a sale right now where
Yes.
the seller's like, yeah, like I'll do 7-8%, right? Which is high. It's higher. Right.
Mm-hmm.
You can borrow right now still high fives, low sixes. But, to him as a 70-something-year-old who could just put his money into a bond,
Yeah.
at 6%, it makes sense. But to actually just be asking sellers for, will they do seller financing, which has happened 3 times in the last couple of months, that shows it all.
I I have heard that. The other thing I've heard, and actually this happened to me, and I'm not going to get into the details too much, but um, getting retraded, grinded at the end. We took a pretty significant hit on a recent transaction, and it was, it's to me it seems like it's the new world, and I'm just kind of curious. Are you seeing deals getting retraded? And just in case you're not familiar with that term, it's basically like you have a property, let's say you agreed for 10 million, and someone comes back and they say, you know what, either we're unconditional or we're not conditional, or we're still in due diligence, and they want a price reduction of some percent. Is that,
Yeah.
are you seeing that? Is it expected? Like,
It
what?
it was happening when interest rates started their spiking, right? March,
Yeah.
April, May, June, when things were in flux and you didn't know when they were going to be increasing. There were deals that got caught in the middle, and yes, there was lots of retrading, right? That happened. But now, we're several changes deep, and it's known that interest rates are going to go up another half to point and a quarter before the end of the year. So an investor going into this, should be very cautious on their own reputation, going under contract on something and thinking they can retrade later on as if they didn't know this was coming.
Yeah.
Okay. So I don't think, at least till the end of the year, there will be that many retrades. I think everyone's going in with the knowledge of what interest rates are or could be in the next couple of months. Like I'm actually working on a little 16 unit deal right now where the buyer told me, hey, make sure the seller is like ready to pounce. He said, because if we can get this done early enough, I'm in at a good interest rate. He said it could change as soon as they do this up.
Gotcha.
Right. And so, so buyers already get this.
Yeah. And as a seller, because on the multifamily that I've got now, I was very clear with the broker. I just said, look, I have zero interest in getting retraded. Your guy has to be coming in eyes wide open, because like this is the number. And, unless something neither of us knew comes up, then I'm just not entertaining it. So like either let's not have this conversation or so, because as a seller, you just don't want to be put into that situation. It's very uncomfortable.
I got to tell you, yeah, I totally agree. I will throw in one wrench that I think could really change things, and that's insurance, brother. Let me tell you something. In the United States, and particularly the Southeast, I've done already one video on it. I got another one coming out next week, but we are about to see unbelievable rates coming back on homes, businesses, health, especially property. We're hearing insane numbers. And so like right now I'm working on another smaller deal. Again, there's just so many smaller deals happening right now. Working on a smaller deal where I went through 7 insurance agents just to try to get a quote so that I could put it in my pro forma so that I could go to market with the asset. Historically, I've never even really gone and gotten insurance quotes because I've just known what it was per unit. Like, I mean, it was fairly stable for a while, right? It jumped up a little bit about a year ago, and you got to know what those were. But now it's like I've got a quote. I got to actually go out and get quotes so that it doesn't go from $1,000 a unit to $2,500 a unit, and then my seller gets retraded, right? Yeah. So I'm trying to head that off. And I'm on this same project. I still haven't gotten an insurance quote. I've gone through 7, right? So I'm a little afraid of what that may come back to, but that's one in which if you're looking to sell an asset right now, if you're an owner or a broker listening to this, go ahead and get a quote on what a new buyer would be paying coming in, because number one, your policy, if you have an umbrella policy, is going to be way lower than the next guy, or your insured value, I'm finding, are way under what they should be. I mean, I got this one that's insured right now for about half of what the reconstruction value would be today. And what the insurance guys are telling me is that they're really cracking down on that. Okay, you can't, as an owner, you can't tell the insurance agent, well, let's, this building is worth 10 million, but let's just do $5 million in insurance. No, if it costs 12 million to reconstruct, that's what it's getting insured for.
That is something we saw that in Alberta probably over the past probably 4 years ago. I think there was a big fire in Fort McMurray, and all of a sudden the insurance premiums across Canada for the most part just spiked. Did insurance spike 3 or 4 years ago as well, and now it's happening again? And is it because of kind of
there was a spike? I don't think it was 3 or 4. In my mind, I want to say it was maybe a couple of years ago, 2 or 3 years ago. It had a pretty good spike. Like multifamily on the larger buildings was, $300 to maybe $600 a unit a year, right? Depending on the size of the asset. And then it jumped to about $1,000, so let's call it $700 to $800 for larger complexes. And then it got to about $1,000 a unit for like under 20, 30 unit deals, right? Now I just don't know. I know it's going to be more than $1,000 a unit for smaller stuff. And I know it's going to be more than $600 or $700 a unit for the bigger stuff. I just don't know how much. And the problem is so many carriers have left Florida. That's the big issue. There's so few left.
Well, that's what I was going to ask. Is this because you're a coastal state and you've got hurricanes and you've got floods, and there's just
not only coastal, it used to be where if you lived on the coast, those were the higher premiums. Now, anywhere in the state, middle of the state or not, they're now considering the whole state coastal. That's number one. Number two, I've been told by insurance guy, our rates are also nuts and is affecting the United States as a whole. because Florida is, I don't know what the words are correctly, but basically we are, we allow attorneys to sue left and right,
Right.
and give sort of the benefit of the doubt to the plaintiff, if you will, or the whatever it is.
Yeah.
And so there's just so much settling that happens, okay, in our state. And there's some unbelievable stat. You'll have to Google it on the percentage of liability claims that happen in Florida as a numerator over denominator being the United States. It's insane,
Wow.
right? So that's affecting rates as well. So our liability coverage on properties has been skyrocketing.
I'm glad that we had this conversation, because it's something that I'm going to have to, maybe underwrite a little more prudently if that starts to trickle down into the markets that we're developing in. I know that they have gone up. I just, like I said, I've got them baked in at a higher number, but if they're anticipated to go up again, then that $500 a unit, $1,000 a unit, that's a huge hit to your bottom line. It's huge.
Oh yeah. Yeah. And it's always been kind of insignificant. And now it's a major deal. It's a major deal.
What are some of the things that I know we're kind of coming to the end, and I was selfish in my own inquisitive mind, if you will, in terms of like, what are you seeing? But like, what are the things that you're seeing out there that maybe we didn't even get a chance to touch on right now? Is there anything else that kind of comes to mind in terms of, or even just any kind of predictions? And like, none of this is investing advice. This is just two guys that are in real estate, essentially, just like, we're just having a conversation, right? And you get to like listen in and do with it what you will, but be smart, obviously.
I've got a great question, and it came to my head, is that I've had way more conversations with investors over the last few months. I should say I'm hearing more from investors saying, the market's volatile. We're just sitting on the side. We're waiting for things to calm down, that kind of thing. And to me, that just never made sense. I've been through 3 or 4 cycles now in my 20 plus years in this business. And what I've learned is that you have to be vigilant constantly all the time, or you're going to miss out on a deal, right? In my northern half of Florida, while yes, the 160 closings a year, it may dip down to 100, which would be significant, right? But there's still 100 freaking deals to be done. And if you're the guy who's just sitting on the side, and maybe it's just an excuse they like to tell themselves so they can slow down a little bit. I don't know. I mean, maybe they just want to rest a little bit, and that's something they say. But you have to be vigilant in this business. You have to look at every single deal that comes across your table. You have to underwrite them constantly, because if 30% of investors are now saying the same thing, you now have less competition, right? And you have a much better probability of being able to grab one of those assets. And listen, the other thing I'll say is sellers are not crazy, right? I mean, the prices you're still seeing, if they are high to you, it's not because the seller is delusional. The seller is you. A buyer is a seller and a seller is a buyer. It's just a timing difference. It's all the same human being. The sellers understand what's happening in the world. They're just saying, hey, if you want to pay this, if you want to buy this, here's my price. If you don't want to pay it, it's cool. I'm flipping killing it on NOI. Take it or not, right? So I just say, like, listen, the sellers are smart. It's the same person you are. And so my prediction, Shane, is I believe pricing expectations of sellers today will not keep going up. I think they're going to stay stationary until a period of time in the future. I believe it's in the next year, where as rents continue to increase, it will now justify that price they want today a year from now. That's what's going to happen. They ain't going to go from $20 million today to $24 million in the future. It's just that when it gets underwritten for $24 million or for $20 million 9 months from now with 6% interest rates, they'll do a deal.
Yeah, because it pencils out. And it's interesting. I've had a similar philosophy in that I love when the market pulls back like this, or there's buyers drop out,
Yeah,
because I'm not very good at in competitive bids. You know what I mean? Because it's just
sure.
very difficult to that's just not my competitive advantage, right? Like, I mean, there's people with lower cost of capital that are able to buy the type of properties that I like to own. And so right
Right.
now, I think getting high quality assets at a still a fair price is um is kind of the game that I'm looking at anyway. So
Well, and
that
you never know who's going to show up to each deal, man. It's
yeah.
almost like the car auction guys, right? You have to
Mhm.
go to every single freaking car auction, because the one you don't go to, there was a Ferrari that had maybe one little thing off on it on the bumper, and they got it for 100 grand off,
Right.
right? But you didn't freaking show up, and so there's going to be, out of 100 deals or 150 deals in a year, there's going to be a couple of them that the same players that you lose to every time didn't show up for whatever reason. They were out of equity, they were out of debt, whatever it was.
Yeah. And one last thing I wanted to just maybe touch on here is, um, because there are maybe less buyers in the market, and does that I'm just kind of putting myself in the shoes of someone that maybe hasn't had as much experience buying commercial real estate. Like, my suggestion or thesis would be that now a broker that was too busy to take your call, they may actually be more receptive to taking your call, because look, they still have a property that they need to sell. And before, when they used to get 20 bids, now it's down to 3 or 4. And if you're credible and real, you know what? Like, you're going to get their attention. Is that fair, or am I being delusional?
Yeah, 100%. I mean, I think the folks who are not as qualified as some of the other players in the 15-20 bid process are certainly getting more looked at. Now, that doesn't mean you can be lazy as a buyer.
Right.
I still think you should bring your game. Have a bio package put together that has the number of, the deals that you own and the addresses, that has your experience level, that has, letters of recommendation from real estate brokers and lenders. That has your investment criteria on it. You still want to look professional and have professional conversations and be humble. I mean,
Mhm.
that's all still the important things that I like to teach, but you're definitely going to be paid more attention to. I think now more than ever, brokers are more so selling a property
Right.
rather than taking in offers
Yeah.
and choosing the right one, right?
I'm happy you said that, because I'm seeing it, right? Like,
Mhm.
now when a
Sure.
broker calls, it used to be, you got sent something, and line up, right? Now it's,
Right.
hey, do you have 20 minutes for a coffee? Because I'd like
Yeah.
to present this, right? And
Right.
look, the
And
pendulum
it's just
swings.
a business.
Yeah,
Yeah, that's
exactly.
exactly right. That's just the way it is. It ain't a broker. Well, I mean, there might be some brokers who are being cocky at that time, but they're not trying to be cocky. It's just that
No,
it's the
this is
times.
the
It's
reality.
like,
Yeah.
on if a deal is getting 20 offers, it's not just the 20 offers he's getting hundreds of phone
Right.
calls and emails and boom, boom, boom. And so there has to be disqualification, techniques that, you got to get to the right guy.
Yeah. Bo, this has been so much fun. I always enjoy these conversations. Where
Good
can
content, brother. I
people
appreciate it.
where can people connect with you, learn more about you? Because I mean,
Sure.
I got to say, like, if you haven't been to Bo's website, like, he gives out so much tremendous information. And even if you're not in the Florida market, like, just studying how you do things is extremely valuable. And if you don't have his book,
Thank you.
grab it. But by all means, Bo, like, where can people find you? What's the best place to
Yeah,
find you?
appreciate that. No, thank you. You hit them. I mean, first of all, my website is beaubeery.com, BeauBeery. And whether you invest in Florida or not, just like Shane was saying, I want you to see the kind of stats I have on my landing page. But more important, when you click on resources at the top, I've got templates that you can use for spreadsheets, letter of intents, bio packages, the markets I cover on there. And if you click on any of the markets, you'll see the kind of stats I cover. And if you can cover those stats for your markets and become experts at those kinds of stats, you'll be able to react to opportunities quicker. Second way is my book, The Multifamily Investors Who Dominate. It's a hardcover on Amazon, it's on Audible, it's on Kindle, and it's a really good inside look at what happens between brokers and sellers and how buyers get chosen and your reputation and all that. And then the third way is my YouTube channel called Beau Knows Multifamily. And I've got playlists for beginners, for advanced level investors. I've got data analytics. Every now and then I put new listings on there before anywhere else. So yeah, look me up.
Perfect. Thank you again, Beau. We'll have to reconvene maybe when the market comes
Absolutely.
back, and we'll see kind of whether or not our predictions were were accurate. But
Yep.
anyways, I love these calls. So thank you very much.
Yeah, man, you bet. Thanks for having me.